How's it going, guys? Just going to do a very quick video on structure based on when to long and when to short and whatever. Okay, so there's a few things that I want to mention. All right, so you need to have some sort of indication for buy and sell signals. As you know, I use my indicator. Okay, so they are to great help to know, sort of when the structure is sort of correct. And you can see here on the Rune on the 8 hour that we're getting a lot of green within the lower spectrum. Okay, but that's not really it. The thing is that overall you want a consolidation, okay, and within that consolidation either a sweep or a structure or whatever, but essentially what you're looking for is the consolidation and the price action within that. At some point you will see that price does something like this, right? And that is sort of rounded bottom, sideways sweep, lower, doesn't really matter, okay, but the shape of it is like a U-shaped sort of pattern, okay, and it needs to have some space, and by space I mean that from when the breakout will occur, it won't be like this normally, it won't happen, it does that only in a trend, okay. And a lot of times, not always, a lot of times you will see that at this price point you can expect the breakout to be a bit further down the road, okay. So whatever price does within that spectrum, it doesn't really matter, okay. It's what matter is sort of the pulse within the middle of it, and you're trying to get in with some kind of a risk in proximity of this, right? So this circle is somewhere where you're trying to get within, okay, and you're trying to hold for the breakout. So you can see that on the 8 hour structure is pretty clear on Rune. So if I take you to the 8 hour structure here, you can see that now we have really formed them. Give me 1 second. You can see how we have formed the consolidation, right? So this is that particular consolidation where you're having a wick to the upside, wick to the downside, very quick, but that doesn't really matter. What you care about is sort of the PA in the middle, okay, and you're trying to look for some pattern to represent that potentially going to break out, right? And you're trying to get in and ride that. Once you have that sort of breakout, right, because the consolidation that holds liquidity is the middle part of it, and by the middle part I mean this, okay. And once you're having sort of the breakout, this candle sideways, that candle, usually price just continues to extend, right? And you want that extension to be fulfilled and continue upwards, okay. That's the thing. Once you're having a breakout, you want the breakout to hold, right? The same goes for the downside. It's really sort of the exact same thing. If you look here on the left of the chart, right, once you're having the breakout to the downside, it extends, right? It's clear and it goes pretty far away. The same goes, this is a good example, right? So you're having the consolidation breakdown. Once you're having the breakout, you're seeing sideways pattern continues. Price never really revisits the previous lows, right? Once it breaks out, it clearly extends for a certain amount of time, meaning that it should really now continue, right? And if it doesn't really continue, that's the thing, that if this now goes up and it gets rejected, it might actually do this instead and then continue, right? So the next area, you don't want to be sort of buyer at the demand zone, right? You then want to look at the next one, right? Because liquidity has been used at this given level. So if this fails, usually you're going to see a breakdown much further, okay. That's something that happens quite often. So obviously, then you can look for liquidity at the next consolidation is higher. So we're going to use a very quick example. This will be an example of somewhere to look for liquidity, this one as well. And you can use New York Open, whatever, right? You can use opens for that. But essentially, you rather want to chase the momentum, right? Because even if you are not correct, then you would want to use the momentum in terms of this candle, right? So if the next opens, you come a bit down and then moves up, right? Comes a bit down, then moves up until actually the trend is over and you're going all the way back and then maybe continues, then this becomes a range. And the point I'm trying to make is that price does a consolidation, it breaks out either to the upside consolidation and it breaks out, and and once it breaks out, it just extends until it does a larger retest, okay? And if it doesn't do a larger retest, it's usually a sweep, and then it goes for the next one and then goes higher, right? And that's where most people get out traded off the market, okay? So you know, even though, you know, the concept that demand zone is there, and if you get a pullback, that will be good, but sometimes those pullbacks, they don't look very good, okay? And I'm just going to use, and it's not the same at all, but just want to bring very tiny an example. It's not the example that I want to use, but let's use this one, okay? In the middle, this one, right? So if you look here, price comes back down, we create the consolidation, we sort kind of trying to break out, and then you can say, okay, so the next demand zone is below there, but you know, we don't react to that. We go all the way back into the next, the previous SR, okay? So usually you want, when price breaks out, you want price to follow up, right? So the same goes for this one. This is a consolidation. We break out. Once that breaks to the downside, this one, usually that doesn't really hold, right? Then it breaks to the next consolidation, okay, lower. So essentially, you want to ride the trend, or you are just waiting for extensions, right? So what I mean by that is that price extends, and I personally use my indicator, of course, for it, right? So when price extends lower and I get the signal on the indicator and the combination of a low somewhere, right? Then I understand, okay, so we are getting close to creating a consolidation, and that consolidation, that is a place where I want to take a long position, right? So I combine those aspects and I take the trade and I look for that expansion. When the market is rewarding me, and when the market is in a clear trend, meaning that usually that happens from, as I said many times, from October to March, you can be much more stubborn with holding your trades. And when price is in a consolidation, and we are outside of these months, when we are in choppy months, I tend to take profit a bit faster, at least something, right? Because what happens is you tend to start round tripping too much, right? And I don't want to round trip every single trade. If I round trip a lot of trades, then I need to take profit on the next few trades to get the P&L sort of back up, and I keep some trades for slightly higher conviction, and I just rotate, right? So for me, if I take profit right there, I don't really care what happens. I'm still bullish, and I can use other strategies to re-enter if price looks good, right? I can re-enter on a 1 hour. I can re-enter into different opens, New York close open, London open, whatever, right? I can use other combinations to re-enter the market, and I can, you know, not really care about the drawdown, because I will look at it as the same trade basically as the previous one, okay? So that's some ideas for you to chew on. Okay guys, peace out.